Man, Wall Street whiplash to start off the new week. After plummeting more than 1,100 points during trading, the Dow kicked in the afterburners, took off on a tear, fueling one of the biggest comebacks we've seen in a while on Wall Street. You can see the Dow actually finished the day up 99 points. Joining us to talk about this is Caleb Silver, editor-in-chief of Investopedia. Caleb, thanks for joining us. What was the catalyst for this sell-off, and was it just bargain hunting which fueled the comeback?
It could have been that. It's hard to say, but really in the last 30 to 20 minutes of trading today, stocks with a huge turnaround erasing some of those big losses. Sometimes this is institutional buyers, the biggest investors in the world, triggering what we call algorithmic trading. When stocks hit a certain point, hit a certain level, they start buying automatically. When that starts happening, other investors start seeing that, they start piling in, then the herd piles in, and it's off to the races. But it can go the other way real fast, and we've seen that over the past couple of weeks. Stock market is very volatile right now and super sensitive, and that's not something we've experienced really for the past year and a half.
Sure, and geopolitical factors always weigh on Wall Street. So how much of a factor in today's sell-off was Russia's military buildup on Ukraine's border, and in turn the Pentagon putting 8,500 U.S. troops on alert and ready to deploy?
Yeah, just another brick in the wall of uncertainty, along with rising interest rates, which we know are on the way, along with persistent inflation, which is at a 40-year high, along with a slowing in corporate profit growth that we haven't seen since in a very long time, right? Companies are not going to be able to keep pace with the growth that they've had. But you add a geopolitical uncertainty with Russia into the mix, that's not helpful either. That's just kryptonite for investors. When they don't have certainty, they get away from stocks, and that's what's been happening since the beginning of the year.
Yeah, Caleb, you just touched a little bit on those inflationary fears. Fed's meeting this week, first policy meeting of the new year, not long after President Biden called on the central bank to take some action here to try and get inflation under control. How closely are investors going to be watching this meeting this week, and what kind of impact do you think it could have in terms of moving towards tightening monetary policy on the markets?
Yeah, well, that we know is going to happen. The Federal Reserve is going to raise interest rates 3, maybe 4, maybe 5 or 6 times this year. They've telegraphed that to us already. They won't start at this meeting tomorrow or the next day. They'll probably start in March, but they may give us a better sense of the timing and of the pace of those rising interest rates. Remember, when that happens, it cools the economy. It makes borrowing costs more expensive, usually cools the stock market too. So we're keeping a very close eye on that and a lot of other things that are affecting investors right now.
You know what else? Of course, some big name earnings this week. Among them, you have Apple and Tesla, so that could move the markets as well.
Yeah, Apple, Tesla, and Microsoft, 3 of the biggest companies in the world, 3 of the most widely held stocks in the world. If you don't think you own Apple, it's probably in your 401k. So as Apple and Microsoft go, so goes the market. They're that widely held, and they have such big market caps that we got to keep a close eye on their earnings reports and what they say about the future.
We mentioned the rebound on the Dow today, but today was also actually the first time since the aftermath of the financial crisis back in 2008 that the NASDAQ was down more than 4% but managed to close up. S&P was briefly in correction territory today as well, Caleb, that reverse course. Do you think that there's more of this to come because of all the factors that we mentioned today?
Yeah, I think we're in for some choppy and volatile times. These swings, these 1,100-point swings, not normal at all. That happens when there's volatility, when there's uncertainty. It's going to be choppy for a bit because investors are getting used to this new reality. So for retail investors, for those of us that are investing in our 401ks, we're not trying to time the market here. Just let this play out, let this happen. There's going to be opportunities to pick up bargains, I have a feeling, in a few months.
Yeah, no need to go on any panic selling, that's for sure. Caleb Silver from Investopedia, thanks for your time, sir.
Thank you.